Welcome back to my Vanguard portfolio update now for the month of May. Already a month on from my last portfolio update where I made some very big changes to my account. But just before we do that, let's have a little bit of discussion and have a look at what's been going on in the markets, both here in the UK and across the pond over in the US. Now, from a UK perspective, you'll see that the FTSE 100 is down 1.5% this month. But other than that, I think you'll agree things have been pretty boring here. As I'm sure you'll all agree at the moment, the UK economy does feel like it's on a bit of a shaky ground. We are battling with some inflation, which I have to keep bringing up every single month now. It's not going away, unfortunately. In fact, I will put up the latest stats from Trueflation, which I think is a better measure of really what's happening, and it's being stubbornly high here in the UK. Now, just interesting enough, I did see a headline here this morning saying that households on average have lost £5,455 each from inflation across the last 2 years, which is crazy when you think about it. And it's just a reminder of how powerful inflation can be on the buying power of your money. You see, you might actually get paid the same amount, or you may have got a pay rise over the past 2 years, let's say 5% a year, for example. But from an inflationary standpoint, you're actually still going to be in the negative. Very good in the private sector, potentially, if you can ask for those pay rises or your employer gives you automatically. From a public sector perspective, I sense a lot of people are being screwed out there, which is obviously why we've seen lots of that strike action take place across various sectors in the workforce. But as always, a really good reminder, if you're not receiving pay rises from your employer for whatever reason, you are effectively losing money, and it's a very, very difficult and painful position to be in if that's the case. Now, jumping across the pond to the United States, let's have a look at the S&P 500 and everything going on with the US stock market, because of course, all the drama happens over there. Starting quickly with the index, let's have a look at the S&P 500. It's now up 1.3% for the month, as you'll see on screen now. The market's having a pretty good turn this year so far. We're only halfway in, so anything could happen, but on a pretty much of a steady rise upwards. We're nowhere near those all-time highs set back in November 2021, but we are at a new height set at least for 2023 right now for the S&P 500. Now, the big news kicking around at the moment really is all around this US debt ceiling. So at the moment, the US government has an overall debt of $31.4 trillion, or at least this is the limit that it's currently allowed to borrow from. Now, if that doesn't get increased, if that debt ceiling doesn't get raised, then technically the US won't be able to borrow anything, won't be able to borrow any money and pay for all its current debt. Because unlike your household budget, governments have to borrow an enormous amount of money and hope to pay them back in the future, as hopefully inflation kind of inflates that away. Now, this has happened multiple times. Lots of political wrangling goes on in the background. Almost definitely everything will get sorted very, very soon. But until that date and before it happens at the last second, anything's up in the air and lots of people are panicking. The banking crisis very much seems to have gone away, at least from a news cycle perspective. No one's now interested in Silicon Valley Bank and all the rest of those kind of things. I think from the big banks' perspective, they're absolutely fine. If anything, it's a great time for them as they're sucking all that small money away and those depositors' money from those small regional banks over in the US, which we don't really get here in the UK. And finally, before we jump into the portfolio, a couple of things I just wanted to pick out from a US perspective as well. I did just see then that Meta has just been fined by the EU for breaking GDPR rules, and this is the biggest fine of all time so far at 1.2 billion euros. Now, the reason that they've been fined is apparently they were taking EU customer data, so EU user data, and shipping that and using that over in the US, which is a breach against the GDPR guidelines. Apparently, Meta is going to be appealing that, so we'll see if that gets anywhere. Now, whether they win that appeal or not, it does really show that the EU has some big teeth now when it comes to enforcing those GDPR rules, so look out for many more. The largest fine before was for Amazon, and you can see here it was for 746 million back in 2021, so keep an eye out for that one. And finally, I think the darling stock at the moment, which is hyping everyone up, which is slightly concerning me a little bit, is Nvidia. Now, this is a chip maker who makes the graphics card in my computers, lots of the graphics cards and data center chips, which really are going to fuel this next generation of AI, or at least that's what everyone hopes. As you can see at the moment, if you look at the stock chart, the price right now is nearly back to its all-time highs back at the end of 2021. And it's been on an unstoppable rise so far this year, over 115%. I'm pretty sure I just put that up on screen now. Now, the reason I wanted to highlight this is just because I fear that retail investors, again, are probably going to get themselves screwed. Just have a look at the financials right now of Nvidia. We're looking at a PE of around 179 and a price to sales of around 29. Now, just from a basic perspective, that means for every dollar the company makes, just purely in revenue, you're paying $29 for that, which is enormous to give you some perspective. And then from a profit perspective, again, for every dollar they make in net profit, you're paying right now $179, which is an enormous sum of money. Now, as usual, I don't claim to be any kind of stock guru or offer any kind of advice when it comes to buying stocks, but it's just when we see things like this, we see massive run-ups, it does get me worried for people piling in. And again, on one of the topics of my last video, FOMO, I think, is absolutely taking hold here. And although AI, I think, and automation is going to be a huge player in the future, how far it goes now and where those revenues come from now is definitely going to be an interesting one. So we'll keep an eye on this one. Okay, with that market update done, let's jump right into the portfolio now, and I'll put this up on the screen now. So let's jump into my Vanguard account. You can see here that I've got both my pension and my ISA with Vanguard if you are brand new here. One of the big changes I made last month was I changed my investments from the S&P 500 and a bit of emerging markets to the FTSE Global All Cap Index Fund. Now, this is a mutual fund, which means you can get all of your money invested, and it's also an accumulating fund, which means that all money and the dividends that I get received in the account, technically they don't hit the account, they just automatically get reinvested back into the fund. Now, I can definitely tell you that since investing in this, it's made my life a lot easier from a Vanguard perspective. I rarely ever log into this account now because I also know there's very little to worry about. And I think one of the best things about this is almost very much the most truest form of passive index fund investing, because you're just taking the entire world, you're buying that whole haystack, as old John Bogle would say, and you're not trying to pick and choose, and you're just buying everything based on market cap. You're going to let the market do its work, and then you're going to buy in as much as you can over longer periods of time. Now, I've already done my buying from a Vanguard perspective. I may add bits and bobs in later, but as at the moment, my ISA is currently with InvestEngine, and the year before that, it's with Trading 212. And just on that one, I always have the latest offers and links in the description below. If you want to get some free shares or free money from any different platform, I always have them below. And thanks to lots of people for already using those links and helping support the channel. Now, let me just quickly break down both the accounts I've got with Vanguard. At the moment, you'll see on screen now my ISA, current value £11,591.36p. I just made 2 transactions for this ISA when I did do this a couple of years ago. You can go back to all of my portfolio updates. I think I did this one live as well, so you should be able to actually see me invest that money back in the day. Now, we can have a look at the performance, because there's no point really looking at the holdings. This is pretty boring now, just a single mutual fund. But we can see we're up here, £394.84p. Going into the performance tab, as always, is interesting, really just from a perspective of just seeing what the market does and how things move. I always like to go through month by month to see how those fluctuations in the market price has changed the value of the account. As you can see at the moment, we're pretty much in a very much a green state. Definitely beats those times in 2022 when most months were going in the red. Now, one thing I do like about the Vanguard platform is that although I have switched funds and moved out of the S&P 500 and just emerging markets, I'm still going to see the returns of my portfolio going back to when I actually opened it. So it doesn't like reset the clock or anything like that. So you can go through and get all those details. But I won't bore you too much here anyway. One of the good things to say is you can go back every single month. I think I maybe missed 1 or 2 months, but you can go back on my account and look through all of my different portfolio updates. But now it's really, really simple, and I really, really like it this way. But so far, this is where my ISA is. I may or may not move it at some point, but for now, I'm very much happy keeping it there. I do get lots of questions, people saying, yes, I technically could move this ISA to pretty much any platform I wanted, but I'm quite happy just having my different sets of ISAs and different pots, if you like, to manage the different ways that I invest. Now, from a pension perspective, we can see we're up a nice amount of gain here. Again, from a holding perspective, it's super simple. I haven't got to go into explaining 5 or 6 different mutual funds. Everything is now in this global all cap. As you can see here, we're now up £1,500, which I think might be the biggest amount of gain that the pension pot has seen. Not 100% on that one. I'll have to go back again for all of my portfolio updates. You can see here we do have randomly 12p in the account. That must have been from when I did one of the transactions, unfortunately. So it's a shame I can't get that bit invested, because every bit will compound over many, many years. Again, just looking back over the performance, and you can see actually when I open the pension, I know I repeat myself a lot during the portfolio updates because a lot of people are brand new, but this pension is of course a self-invested personal pension, and it's lots of different funds from my different pension accounts that I've had from the different jobs I've had in my life. So I've got them in one place to manage them. You're very welcome to do that, of course. Remember, I'm not a financial advisor. Please do seek advice if you do need it. This is just what I wanted to do, to keep everything in one place, rather than seeing different letters through the post from Legal and General, Scottish Widows, and all kinds of gobbledygook on 10 different pages, trying to convince me to pay lots of fees for this very strange mutual fund. So personally for me, I like to control everything. Now, from a month-to-month perspective, you can see where this money's come from. Let's just have a look and see where we got this £1,500 from. Now, you can see if we go month by month, we've had a pretty bad 2022, if you can see here, especially December 2022. As you know, from an investing perspective, certainly if you were holding assets, we saw lots and lots of declines there in a single month then, cumulative returns all the way down to minus £2,000, which is not a pretty place to be. However, good if you're going to be buying in, great also for dollar cost average investors who want to get those lower prices. Now, if I'm not mistaken, it's not the highest it's ever been, but I think it might be the second highest. I think back in August 2022, it was at 43,307, as you can see here. And I don't think it's had many times in the middle or above 42k. So in a good place at the moment. It's not going to have a massive return in the Vanguard account. It has accumulated in other pension accounts for many, many years, mainly in broad low-cost index funds. So this doesn't really tell the full story. The main thing for this, as many of you will know, is I can only touch this for my pension anyway. So this should compound for a couple of decades and we should come out the other end, hopefully in a good place. Anyway, I'll go back now to the main screen so you can see total portfolio value, 54,387 and 99p. So I can buy myself an ice cream. Anyway, nice and simple, and I'll just expand that out there so we can see all of the holdings in total. As always, if you want to go back through any of these portfolio updates, I do keep the playlist in the description. And thank you so much for watching. As always, don't forget to leave me a like on the way out, subscribe for many, many more. I'll see you in the next video. And as always, happy investing.